Good evening. I'm David Gerald from SIAS, President and CEO, and I welcome you to this dialogue session with Soilbuild REIT. Soilbuild REIT, as you know, is one of 17 privatization exercises in 2020. This privatization exercise is proposed jointly by Mr. Lim Chap Huat, the Executive Chairman of Soilbuild Group Holdings, sponsor of Soilbuild REIT, and Clay Holdings, one special purpose vehicle established and managed by Blackstone Real Estate, a leading alternative investment management firm. The rationale for this privatization exercise is simple. The offer price of 0.55 cents provides existing unit holders an attractive opportunity to exit their investment in Soilbuild REIT, which has lagged in growth versus peers in the industrial REIT space. Given limited DPU accretive opportunities, debt headroom constraints, and the lack of unit holders' interest in rights issuance. So this dialogue session is arranged by SIAS to provide you, unit holders, with a holistic view of the proposed privatization exercise and clarify the questions you have. Let me introduce the panel today. I'm very pleased to have with me today the following officers to help address the issues raised by you, the unit holders. Mr. Lim Chin, Director, Soilbuild Group Holdings. Mr. Roy Teo, Chief Executive Officer, SB REIT Management Private Limited. Before we begin, a gentle reminder that SIAS does not recommend unit holders how to vote. Please seek your licensed professional advisor for advice. Without further ado, let me hand over the session to Mr. Roy Teo and his advisors, who will take us through a presentation and the rationale for the transaction. Mr. Roy Teo.
Thanks, David. On behalf of the Board of Directors, we would like to thank all unit holders for your support over the past years. The board and the management of SB REIT have always and remains committed to the growth and optimization of the REIT's portfolio. Over the past 3 years, we have taken several strategic initiatives to strengthen the portfolio. Despite all these efforts, SB REIT has continued to trade at a high DPU. This has hindered our ability to bid competitively for third-party assets, and we are not able to maximize the REIT's potential. Although COVID-19 vaccination programs are being rolled out concurrently globally, the global recovery remains uncertain. In September 2020, we were informed by the sponsor that they had entered into a non-binding term sheet in relation to a possible transaction involving the family's stake, direct and indirect interest in the REIT. The independent directors and management had engaged in numerous discussions and negotiations over the past months and would like to present the trust scheme of arrangement to the unit holders for your consideration. With this, I will pass the time to Citibank to go through the highlights of the transaction summary.
Thank you, Roy. Hi, I'm John Siow from Citi, the advisor to the offerors. So if I can take you to the next slide. On this page, this sets out a transaction summary of the privatization. The offeror is Clay Holdings 3 Limited, a SPV wholly owned by Clay Holdings 2 Limited and effectively owned by Blackstone and Mr. Lim Chap Huat. The transaction structure involves two things. One, the proposed acquisition of all the issued SB units held by SB unit holders by way of the trust scheme. And secondly, the sale of all the assets in Australia by way of the sale of 100% of the units in Soilbuild Australia Trust to entities controlled by a Blackstone SPV. And this is interconditional with the trust scheme. The scheme consideration itself is 0.55 cents per SB unit, Sing dollars 0.55 per SB unit, and it will be paid entirely in cash. The scheme consideration will be reduced by the amount of any distributions which are not permitted distributions declared made or paid by the SB manager for the financial period between 1st October 2020 and 31st March 2021. On the 21st of January 2021, the SB manager announced the 4Q 2020 distribution, and the books closure date for this distribution was on 29 January 2021. Accordingly, the scheme consideration of Sing dollar 0.55 per SB unit will be reduced by the 4Q 2020 distribution amount, resulting in an adjusted scheme consideration of Sing dollar 0.53806 per SB unit. Moving on to the next page, this sets out an overview of the Australian asset disposal. The trust scheme itself is conditional upon the completion of the Australian asset disposal. It is worth noting that the Australian asset disposal is merely a structuring step with the sole intent of effecting the acquisition in the most time-efficient manner. The Australian asset disposal is intended to effect the acquisition in an optimal and efficient manner and is therefore interconditional with the trust scheme and will complete on the same date as the effective date of the trust scheme. The adjusted scheme consideration to be paid to the SB unit holders upon the trust scheme becoming effective takes into account the value of the Australian assets. Accordingly, the adjusted scheme consideration payable to SB unit holders will not be reduced in any way by the amount of the Australian asset disposal consideration. The Australian assets in this case refer to 14 Mott Street, 25 Grenfell Street, and Inghamsburton. And the approvals required for the disposal will be two things. One, the Australian asset disposal will require the SB unit holders approval by way of an ordinary resolution. And secondly, the Australian asset disposal will not be effected if the trust scheme is not approved. And then moving on to the next page, this sets out an overview of the pro forma shareholding structure of SB REIT immediately after the transaction. As you can see on this page, the two shareholders after the transaction will comprise of Mr. Lim Chap Huat holding just above 30%, and the remaining shares will be held by a Blackstone SPV. And Blackstone SPV will also own 100% of the Australian assets. With this, I shall hand over to Han Chin to present the transaction rationale.
Thank you, John. On behalf of the offeror, maybe let me share some of the thinking behind the transaction rationale and behind the trust scheme. So on the slide, we have set out 5 bullet points, which I will go into details in the slides to follow. But in summary, the offeror firmly believes that the scheme consideration presents an opportunity for SB unit holders to exceed their investment in the REIT and an attractive premium to current and historical prices. Moving on to the first point, growing SB REIT through DPU accretive acquisitions requires the DPU yield of the REIT to trade sufficiently low, as well as the ability of the REIT to raise capital to fund such acquisitions. So on the bottom left of the slide, we set out below the equity issuances that the REIT has undertaken since IPO. And if I can focus your attention onto the box in red, you will see that in August 2019, we announced an acquisition to fund a commercial asset in Adelaide, Australia. And concurrently with that acquisition, we announced a preferential offering. And if you look at the subscription rate of the take-up rate of that preferential offering, it was only 82%. So we needed the support of minority unit holders to be able to fund such yield accretive acquisitions. And on the bottom right of the screen, you will see the debt headroom. And based on the 45% limit that the REIT has targeted, that leaves us with an insignificant amount of 145 million to fund further acquisitions, which is quite tight. So faced with these constraints on the next slide, as a result of these constraints, we have not been able to grow as fast as our peers. And if you look at the chart at the bottom, the average is about 1.8 times in size that our peers have grown since IPO, whereas SB REIT has only grown about 1.5 times since IPO. As a result of that, SB REIT still has a long way to go before being included in the key REIT index. And the benefits of being in the REIT index obviously ultimately would be to try to trade at a lower DPU yield. And that's a result of higher liquidity, larger institutional followings, and stronger valuations. If you look at the chart at the bottom, the current free float is about 380 million. And there is still a gap of almost 1.1 billion before we can meet the minimum entry requirement to be part of their REIT index. So as a result of all these factors, they have collectively contributed towards 1, SB units price underperforming the key REIT index since IPO. 2, the REIT's relatively limited analyst following. And 3, the REIT's relatively low daily trading volumes. So on the chart on the left, you will see that the unit performance since IPO has trended downwards, and that's way below the key REIT index as a comparison. And on the right, we have set out the analyst coverage and the 12-month daily trading volume, and on both counts, SB REIT's metric has traded on the lower end compared to the peers. So faced with all of these outcomes, the sponsor naturally has considered several proposals to try to unlock value for unit holders. And over the past couple of years, in fact, we have received numerous proposals from various parties comprising private equity funds, real estate firms, real estate developers. And they come from various geographical sectors, including Hong Kong, China, the US, and Australia. And after careful consideration, we firmly believe that the proposal by Blackstone presents the best option for minority unit holders because 1, it represents the highest offer price we have received from all of the parties that we entered into discussions with. 2, very importantly, the proposal is backed by Blackstone's strong track record of privatizations. And finally, this is the most credible offer on the table. It offers the most deal certainty to unit holders in terms of timing and execution. Thank you.
Thanks, Han Ching. I will now go through the 4 key financial evaluation of the trust scheme. I have 4 points to cover here, and I will go through a little bit more detail as we go through the slides. Now, the adjusted scheme consideration of 53.8 cents represents a premium ranging from 26.3 to 49.9% to the 1 month, 3 months, 6 months, and 12 months VWAP. Based on the 12 months VWAP, it consists of approximately 5 months of pre-COVID unit price performance. So, and you can see that, that is a huge premium over the 12 months. The premium is 26.3%. On slide 20, we track the share price for the past 1 over year, and 55 cents or 53.8 cents is close to the closing price of 55 cents as shown in the chart. On slide 21, NAV, the Audit and Risk Committee of the SB manager, we have commissioned an independent valuer to undertake an independent valuation of the portfolio as at 30th of November. So you see the valuation of the respective assets over the column there. For the financial reporting purposes, an annual valuation was also conducted as at 31st of December 2020. Now, if you compare the 30th November versus the 31st December valuation, there's basically no material change over the valuation number. For the Australian portfolio, you will see that there is about 11 million of differences, and that is solely due to exchange rate differences. So it's not due to valuation, but purely exchange rate. In short, the NAV as at 31st of December ranges from 54.6 cents to 55.9 cents. And if you go on to the next slide, at slide 22, and you compare the price over NAV multiple, the adjusted scheme consideration is 0.96 times to 0.99 times. Both multiples exceed the historical average. The last slide I have here is a comparison on the adjusted scheme consideration versus analyst target price. The average analyst target price is 46.5 cents. And if we omit Jeffries, the target price is 35 cents. Sorry, if we omit Jeffries' target price of 35 cents, the average would be 49 cents. The adjusted scheme consideration represents a premium of 15.7% and 9.8%. With this, I will hand over the rest of the presentation to Ziwei from DBS.
Good evening, unit holders. Allow me now to take you through the recommendation of the IFA, as well as the directors of the Soilbuild manager and the Soilbuild independent directors. On slide 25, you see the views on the first 2 resolutions. These first 2 resolutions are organized as part of the extraordinary general meeting. So the first resolution is to amend the trust deed. And this is necessary, as explained before, to implement the trust scheme and facilitate the delisting of the REIT. So for this, the directors of the REIT manager have advised unit holders to vote in favor of the trust deed amendments. And this you can see in the box on the upper half of the slide. In the lower half of the slide, you will then see the second resolution, and that is to approve the Australian asset disposal, which was also explained earlier. And this is to ensure that the deal can be structured and executed in a time-efficient manner. And here, the recommendation of the Soilbuild independent directors is that you, the unit holders, vote in favor of the Australian asset disposal at the EGM. I'll take you to slide 26 now. Slide 26 contains the third resolution, and this is structured and organized as part of the scheme meeting that happens just after the EGM. Here, the resolution is to approve the trust scheme, right? And this is with the price and the financial evaluation that you've heard earlier. And here, KPMG, which acted as the independent financial advisor to the independent directors of Soilbuild REIT manager, have advised that the terms of the proposed transaction are fair and reasonable from a financial point of view, and have advised the Soilbuild independent directors to recommend that you, the unit holders, vote in favor of the proposed resolution at the trust scheme meeting. This you can see in the upper half of slide 26. Therefore, in the lower half of the same slide, the independent directors, having taken the advice of KPMG, have advised you, the unit holders, to vote in favor of the trust scheme at the meeting. Allow me now to take you through to the timeline and the approvals required. This is on slide 28. As mentioned, there are 3 resolutions, and you can see them in the green boxes on the left of this page. Okay? First, what are the approval thresholds? To amend the trust deed, you require the approval of not less than 75% of the total number of votes cast. Second, to approve the Australian asset disposal, we require the approval of more than 50% of the total number of votes cast. And in this situation, the Lim family, Ms. Lim Chap Huat, Soilbuild Group Holdings, and the REIT manager have voluntarily agreed to abstain from voting. So you, the unit holders, the independent unit holders, you will have a say in this. The third resolution is to approve the trust scheme. Right? And this is conditional upon the first 2 resolutions being approved already. Okay? And here, the threshold for this third resolution is a majority in number, representing at least 75% in value of the total number of units, right, held by the unit holders present and voting through proxy. It is emphasized that this resolution number 3 is decided solely by you, the independent unit holders. The offeror and its concert parties, including Blackstone, Ms. Lim Chap Huat, and the Lim family, right, and all those who are common substantial unit holders or shareholders of the REIT and the offeror, will abstain from voting. Okay? Finally, in the yellow box on the bottom left of the slide, there is a court process thereafter, where the court will have to approve it as well. Allow me now to take you finally to the timeline that is set out on page 29. There is a horizontal green line from left to right on the slide. I would like to emphasize and draw your attention especially to box number 4 on the lower half of the slide. Please cast your eye on that because that date is very critical. The 9th of March is your deadline to cast your vote via proxy for this. Please remember, as we stated on the front cover of the scheme document, that due to COVID, there is no physical meeting. The EGM and the scheme meeting are convened by electronic means. Therefore, your proxy vote must be, it's the last date and time for submission is on the 9th of March. Okay? Then thereafter, as mentioned, on the 11th of March, there will be an electronically convened EGM and trust scheme meeting. And then thereafter, there will be some other steps required, including the court approval, before finally, right, the delisting of the unit holders, the REITs units happen in box number 8, expected around the 14th of April. Thank you, unit holders. I'll pass the time now to Mr. David Gerald. Thank you.
Thank you. So understand is that the offer is very close to NAV,
Yes.
Very, very close to NAV. The IFA has recommended vote in favor. The independent directors have recommended vote in favor. It's a scheme of arrangement, so there's a safeguard by the court looking at the deal.
That's right.
So you provide, and also the majority substantial shareholders will not vote.
Yes.
Okay, that's good beginning. Let me ask you some questions that SIA has, which I'm sure some of the unit holders are thinking about. And this is to Roy and Han Chin. Can the company share with unit holders the other options considered? What are the salient features of the option over others in this deal? That is, what did Blackstone do right? And what did other proposals fail to do?
Maybe I'll start, Roy, first from the offeror's perspective.
Sure.
As the sponsor of the REIT, and over the past couple of years, from time to time, we have been approached by numerous parties.
Sure.
And as I shared in the slides, these are a wide-ranging variety of parties. They are real estate funds, real estate developers, private equity funds, and they span globally, US, China, Hong Kong, even Australia. And they have all approached us, and we have considered all these propositions very seriously, because ultimately we want to unlock value of the REIT, which will benefit both us as well as the minority unit holders. Ultimately, we decided to work with Blackstone for the three reasons that I've shared in the slide earlier.
Yes.
One, most importantly, the offer by Blackstone, the proposal by Blackstone that was on the table offered the highest price among all of the proposals that we have received. Two, deal certainty and timing in terms of execution was very important for us as well, and that Blackstone proposal checked that box. And finally, if you would recall, back in 2017, Blackstone also successfully privatized a Cretia's Retail Trust. And so we are also impressed by their track record of a strong privatization.
Right. Roy, anything to add?
Well, from the manager's perspective, I guess we did not initiate the deal. The deal was brought to us by the sponsor together with Blackstone. And I guess our key role here is to make sure that the deal is credible, and the assessment is done together with the independent directors. If it's credible, then we will table it for the unit holders, for them to decide, allow them an opportunity to look at the deal and vote for themselves.
How long will it take to turn around, you think? Blackstone is seeing something very interesting here.
Well, I think maybe, David, from the offeror's perspective, or actually from the general public's perspective, we are still in the midst of the COVID pandemic. And I think it's anybody's guess as to how fast normalcy can return globally. As we see, just when we thought that the first wave is over, I think from Singapore's perspective, we are very safe. I think the government has done well. But if you look across globally, major countries like UK, they just had their second or third wave. Last night, US marked a very somber milestone, 500,000 deaths. It's shown that what it has shown is that the pandemic is very uncertain. Nobody knows when we can get the vaccine rolled out, whether the vaccine is fully effective. And what that translates to unit holders and the portfolio is that I think we are still going to continue to be facing macro challenges in terms of the environment we operate in. Growth, rents are going to be continued to be suppressed.
Tell me that the vaccine is safe, because I'm going to take one soon.
I hope so. That's what whether it's safe to prevent transmission, I think it's an open question. Yeah.
So it's a decision taken, having in totality, the decision in totality is better to let go than to keep, because unit holders are going to suffer. All right. So does the involved parties think this is the most opportune time for a privatization exercise now? How important is this privatization exercise to the future strategy and operations of Soilbuild REIT? Also, does the involved parties think that the scheme consideration of 55 cents is, IFA says is fair and reasonable, right? You also say, all of them are saying that with the abatement of COVID and the economy poised for recovery and growth. Finance Minister says we're going to take off, our economy will be back soon. You're not going to oppose him, but do you align your views that once COVID is over, that you can recover, and if so, how long?
Well, whether we will recover post-COVID, I guess during the COVID, you see that the retail sector is badly affected. And because of the work from home, we see that the office sector is now also getting affected because a lot of organizations, they start to realize that they can actually operate pretty effectively at home.
Yes.
They may cut down on the space requirement, and that is affecting some of the offices. For Soilbuild REIT, we have a mix of both
Yes.
sectors. We are not a pure industrial REIT. We have got 50% into industrial, manufacturing, production, a little bit of storage, and we have about 50% in the office business park sector. So even post-COVID, there remains a bit of an uncertainty. How will the office user come back to the business parks? Today, when I go back to my business park, it is actually very quiet
Very
compared to Tuas and Jurong. Yes.
So that's a real fear.
Yeah.
Can the company explain to unit holders the headwinds faced by Soilbuild REIT in the past and the present? I think you touched on some of it.
Yeah.
And the efforts undertaken by the company to unlock value for unit holders. How would taking Soilbuild REIT private unlock its value? Why can't the company unlock such value as a listed company? This is some of the unit holders are wondering the same.
Well, we were listed in 2013, and when I look at the past and I track back my footstep to the past, in 2015, during the major oil crash, and I look at our exposure to the marine offshore oil and gas sector, we had a huge exposure to that sector. It comes out to almost like 20-25%. And for unit holders who have been with us for that long, they will realize that we had got two anchor tenants. One is Technics Offshore, which is now under judiciary management and is still ongoing. They were listed. We have another listco company called KTL. They are our tenant, and they also went into arrears. The thing is that we managed to salvage the situation, but it took us a long time. KTL Global, the facility, we sold it to Soilbuild Group in 2017 to raise some cash, and the Technics Offshore, although the arrears and the downturn came in 2015, we only managed to sell it in 2020 during the COVID lockdown. Right? Things were not that rosy because after the IPO in 2013, industrial rental hit a peak in 2015, and from 2015 it was on a downward cycle. That cycle was very tough for us, especially we were implicated with the oil and gas downturn. So those were very tough years. We managed to try to turn it around. 2018 we mentioned that we will grow into Australia. We will expand our investment mandate into Australia, and we did investments. So we try to grow the portfolio into more stable geographical location. 2018 and 2019, we invested about 250 million into the Australian market. And that in a way helped us to withstand some of the devaluation pressure over in Singapore. Yeah. Which is why the NAV it is today, and the overall look at it, they are offering quite close to the NAV.
So Australian market robust
well
at the moment?
Australian currency is very strong at the moment. Yeah.
Okay, good. Anything to add, Han Chin?
Yeah, maybe I'll just quickly add a couple of points from the offeror's perspective.
Yes.
Again, the discussions that we have had with various parties spanned a couple of years, and this was even before the COVID period. And I think, as Roy has highlighted, going forward, the macro challenges in the environment we operate in will continue to be there.
Yes.
The timing of a recovery from COVID still remains uncertain. And so shareholders, unit holders will continue to be faced with that uncertainty in terms of the future of the REIT. But what is certain here is that we have put forward a very credible proposal, which is at NAV, very close to NAV. And that proposal is certain in terms of timing and execution as well. And we are seeking the approval of unit holders to bless us with this transaction.
So the most important reason seems to be the future, the uncertain future and the performance so far of the company, and the uncertain future made force the decision.
Yeah. I think to be fair, we also want to protect the interests of minority
Yes.
unit holders. So we have tried over the years, as Roy has highlighted. And the key challenge in growing, and we want to grow for the reasons I've shared, was the high trading yield, and that has hindered our ability to make DPU accretive acquisitions. And so we think that in private hands, it's easier to operate the portfolio, easier to organize it, and that's a key contributing factor as well to wanting
How many
to take it
minority
private.
do you have? How many in numbers?
Numbers.
9 over 1,000.
9 over 1,000.
Yes,
That's a big number.
9 over 1,000, close to 10,000.
10,000. Okay, so how management explored has the management, or have the management explored other areas of growth and/or management, example recapitalisation from sponsor, corporate restructuring, reallocation of existing portfolio, venture into other sub-segments like data centers. I'm sure you would have had your hand, you would have tried your hand in some of these, right? Who would answer? Yes, Roy. Yeah.
So continue from the story of
Yes.
our expansion into Australia. Those expansion, we need to raise funds.
Yes.
Right? 2018, we sold KTL to Soilbuild Group. We raised small sum of money. We issued perpetual.
Yes.
Issued perpetual together with the sale disposal. We invested about 120 million into Australia. Now, not many unit holders are aware that the 65 million perpetual we issued, close to 50% were backstopped by the sponsor. So it may be timing issue that the market wasn't very receptive of perpetual issuance, but that is a sign of the support they have for Soilbuild REIT. In 2019, we continue to persevere. We believe that the direction to invest in Australia is good, it's clear, we will persevere in that direction. We again, did a preferential issuance and we tapped the market. This time around, like what Han Ching have mentioned, the take-up rate was only 82%, with the balance underwritten by the bank. So we believe that buying right assets, good assets, they don't come cheap.
Yeah.
And the yield is typically pretty low, and we have to bid competitively. The high trading yield of the REIT currently, that is something which is very challenging for us to overcome. Every fundraising we do, it will be yield dilutive, and that is the challenges we face today. Yeah.
So Blackstone is going to face, and the group is going to face quite a lot of challenges from what I hear tonight.
We think that being private
Yes.
allows us to operate the portfolio with a bit more flexibility. For one, at least we don't have the debt headroom for 50% that is set by the MAS, and two, there are no development limits. So that's the angle we see.
So it'll be more flexible for
Yes.
you. So given that this transaction is initiated by a major interested party, what are some safeguards enacted to prevent instances of conflicts of interest?
So at the REIT manager and the independent directors level, the independent directors have took this up very close to their heart to safeguard the interest for the minority. The discussion with the IFA, valuers, all these were done with distancing from the sponsor. So that was the first step they did. The choice of doing a scheme, a trust scheme, whereby the vote is 100% by the minority shareholders. That is the safeguard which the independent directors and the offeror have discussed, and we thought that this is the best to table it for their support. Yeah.
So before I go on to some of the questions we have received tonight, what would be the company's plan B if this proposed privatization for any reason exercise fails to go through? Have a plan B?
From the offeror's perspective, certainly under the Singapore Code of Takeover and Mergers, we will not be able to make an offer for the next 12 months. As
Yes.
Mr. Gerald, you will know.
I know.
For the manager, life continues. We will continue to deliver value. What we had done in the past, we will persevere. We will continue to do that. But just at the macro economy level, we just have to be a bit careful that growth, rental, escalations, and the expectation from the public may not be what the actual performance will be.
You're expecting the office market to be rather thin after
There's a lot
COVID.
of uncertainty in the office market because now what I say, the organizations, especially the Americans and the Europeans organizations, tenant, they are getting used to working from home. They trust the employee, and the employees have delivered during COVID. So they are looking into their footprint of how can they shrink it, and whether they can all meet all together, office space.
I worked 52 years in an office. Last 1 year I'm working from home.
Yeah.
I don't think I want to go back to office.
Well, see, that is the challenges for the landlord right now.
Exactly.
Yes.
Yeah.
Richard, any questions? From the pigeonhole, are the unit holders posing any questions? We can take them now. Yes. Something is covering. I bought at IPO and paid 78 cents per unit, so it means I will get less money back than what I paid for. How is this fair?
Maybe I can take this question. We IPO at 78 cents. Over the past years since IPO, we did various rights issue. The X rights is probably around 72 cents. And since IPO till now, we have distributed close to 40 cents.
40 cents?
40 cents of dividends.
40 cents of dividends, yes.
So the offer price of 53.8, if you add in the 40 cents of dividend, that is about 93.8 cents.
With dividends, 93.8
cents.
93.8 cents.
X rights price is about 72 if you support us throughout the rights issuance. Yeah.
Good. Next question. Why is the scheme consideration reduced to? Yeah, so he just explained.
Maybe I'll answer this from the offeror's perspective. So when we announced the transaction on 14 December, we announced it at 55 cents. And also in the announcement, we have made it clear that the distribution will be reduced by any, the scheme consideration will be reduced by any distributions paid out by the REIT from the period from 31st October 2020 to 31st of March 2021. And accordingly, in the fourth quarter, the REIT announced a dividend of 1.194 cents, and that's why we are taking off 1.194 cents from 55 cents, and it gives you 53.806 cents.
Okay. Isn't there a conflict of interest to Soilbuild REIT shareholders to sell its Aussie entity to an entity of Blackstone Group and the current chairman of Soilbuild REIT? Is there a conflict?
Again, as we have tried to explain earlier, I understand that it may be confusing for some minority shareholders. So maybe we'll take this chance to explain why we are doing the Australian structure. And really the main reason is to give certainty to the timeline of execution and when shareholders, unit holders can receive their consideration. The important detail to highlight here is that unit holders are not impacted economically at all. Regardless of the price of the Australian assets or whatever price they're sold at, unit holders will receive the full scheme consideration that they are promised, which is 55 cents, and subsequently reduced to 53.8 cents. So in short, unit holders are not economically impacted at all, and it is a mere structuring step to give the deal certainty in terms of timing and execution.
So, yes, you can explain.
I'd like to also give assurance to the unit holders that, as mentioned on slide 28, right, the approval of this resolution, the Australian asset disposal, in this case, the Lim family, Ms. Lim Chap Huat, Soilbuild Group Holdings, and the REIT manager have voluntarily agreed to abstain from voting. So that further gives you assurance about the fact
to
that
avoid the conflict.
You get to express your view as an independent unit holder. Thank you.
Okay.
Maybe I can add a point here.
Yeah.
When I go through the slides on the NAV, you can see that the NAV calculation have taken into consideration the Australian portfolio. So it has been valued fully on the Australian portfolio. NAV, everything has been calculated based on that basis. With or without the disposal, that is the evaluation.
Yes.
On a total portfolio basis.
Yes, that's the case with DBS. That is the case,
Yeah.
right? Okay, next question, please. So, with the privatisation delisting of Soilbuild BizTrust, there is concern by investors holding the 6% perpetual securities issued by Soilbuild BizTrust What safeguards are there for investors?
The first safeguard they have is that the perpetual has a dividend stopper.
Dividends?
Dividend stopper.
Yeah.
So if we don't pay the coupon for these perpetual securities, basically the company cannot declare out dividend. So they are assured of the dividend moving forward. As for the new shareholder, assuming this is approved, the new shareholder are Soilbuild together with Blackstone. And Blackstone is such a big global company.
Yes.
I think that is a very strong assurance that the perpetual will be well. Yeah.
Yes. So they can be assured that there will be dividends if you do make money.
Yes.
Okay, so is there another question? Richard Parker. Is it not true that Lim Chap Huat and his family are the main winners, making a couple of $100 million by selling at 0.730 and buying back opportunistically? Is this true?
Maybe I'll speak
Yes.
on behalf of the sponsors. Again, like we said, Roy has done the calculations, and when you look into count totality of the distributions, I think all shareholders, including our family, who is a significant shareholder, would have made money together in the privatization price. And two, more importantly, I think the offer price the scheme price that we are going out at now, 55 cents, is at the net asset value of the REIT. And the independent financial advisors have also opined that that is fair and reasonable.
Not only the family, but everyone is in it. Is that your answer?
Yes.
Okay. Surely the poor unit price performance from 2015 is a direct result of the poor performance of the REIT manager. Very briefly, I mean, we can go on talking about this for a long time, but not true.
Market factor play a very critical part in this. We can take out statistics from JTC, from URA, to talk about the rental indexes. It has been on a decline from 2015 onwards. Occupancy was very challenging because a lot of buildings, a lot of industrial buildings were being built from 2012 to 2015.
After you came in?
I was at IPO.
I
was at IPO as part of the management team. But that is the past. The share price was affected, and the oil and gas exposure, like what I've mentioned, also play a part in the poor performance. Yeah.
More players into the market.
More players, more landlords, more
Landlords.
building got completed.
You didn't expect that, did you?
That is a factor which we can't control, because the amount of land given out by the government, JTC, just add on to the supply to the industrial landscape.
Yes. Any others? Generally, PE will not get involved unless they expect to make 20% plus return in a couple of years. Why can't the REIT manager achieve this? Is that true? Can you confirm that?
I think as a general point, one of the key differences between being listed and being unlisted is the development limits that the REIT has put in place. The MAS has put in place, so that's a safeguard for minority unit holders. And two, as I've shared earlier, also there is a leverage limit that the REIT can take. So that's the reason why, one, we want to take it private, because I think in private hands there's a lot more flexibility in terms of that.
I think what they're thinking of is, if Blackstone is coming in, if PE is coming in, he's smelling something good. Are we not getting that what they are getting?
Again, that's why I think we have chosen a structure which is a scheme of arrangement, and ultimately that leaves the significant shareholders, the common shareholders, the concert parties all cannot vote. So us as the sponsors, we cannot vote, and ultimately we put the transaction in the hands of minority unit holders to approve it.
How sure are you of the sale of the properties in Australia?
The sale to the Blackstone
Blackstone,
Group? That is interconditional. That is interconditional.
Interconditional.
Yeah,
okay, so
the
that's
unit holders get to vote.
Right.
We can't get the trust done without the sale.
Without the sale.
And we will not do the sale without the trust scheme being
So
done.
it's certain. Okay. Why does the offer consideration have to be reduced by the final dividend payable? One is asset value and one is rental income.
Maybe I'll take the question. And when we price the consideration to offer to unit holders, that takes into account, as Mr. Ng has rightly mentioned, the asset value of the portfolio. And that asset value of the portfolio actually takes into account the future income that the asset will generate as well. And hence, taken into consideration, we are also reducing the dividends that are payable for the 2 quarters up to 31st of March. And that we have announced on 14 December.
Well, unit holders are asking very interesting questions. All right. What sort of due diligence did the management at Soilbuild REIT have conducted on the fair value of these divestments of its Australian assets? Roy?
Yeah, the asset valuation are done by independent valuer, and the independent valuer knows that the purpose of that valuation is for a potential deal such as the scheme. All right. So the valuers are very careful about what they're going to evaluate, and the IFA, together with the auditor, will go through that set of documents prepared by the valuer. You know, so that is the kind of third-party expert where we have engaged to look at this deal. But again, you know, like what Han Ching had mentioned, the sale of the Australian asset is just a structuring step. When the IFA look at the entire deal, it includes the Australian asset. With or without that disposal, the NAV includes the full valuation of the Australian assets and the portfolio already. Yeah.
So the independent financial advisor and the auditors have looked at it carefully.
The auditors will look at it for the year-end financial reporting point of view.
Yes.
Yeah.
Yes.
The valuer will have 2 sets of valuation.
Yes.
One is for the scheme and one is for financial year-end.
Right.
Yeah.
And I just want to add that ultimately minority unit holders are not impacted at all. There is no net economic impact to what they will receive, regardless of the price that the Australian assets are sold. They will receive the full consideration, and that consideration, as Roy mentioned, takes into account the value of the Australian assets.
Yes.
It's a little bit confusing, I must agree. And we get this question a lot of times when we meet up with institutional investors.
Yeah, I mean, in the end, it is not just 53 cents, but you have declared 40 cents dividend already. And if you impact that, it's 72 cents, did you say?
Ex-rights.
Ex-rights. Okay, next question. For shareholders who also supported by investing into the perp issuance, what will happen with the perp? Assumption was that the REIT will continue to be listed.
Assuming the privatisation goes through, I think it's a bit premature to talk about what will happen at the first call date, which is in September. So I think we would make a decision closer to the date. But for now, I think the focus of the REIT managers and the sponsors and the offeror is the transaction at hand.
Perhaps, I mean, you're obliged to give the coupon rate, right? Promised in the document?
Yes. And of course, as Mr. Gerald, you have pointed out, we will continue to honour our obligations under them to pay out the coupon. And there is that protection of the dividend stopper, as Roy mentioned earlier.
So that's the answer to this question.
Yes.
Next, please. Trust we as shareholders need transparency and an independent valuers of the Aussie assets, and whether the negotiations of the sale are done in good faith to its shareholders. That must be the case. Roy?
It's the valuation of the Australian assets was done. The negotiation for the sale, we took it as part of the transaction. So it's interconditional upon the scheme and the sale. Like I said, we can't do the sale without the scheme, and we can't do the scheme if the sale is not being approved. So it's interconditional of the 2 resolutions. The negotiation of the sale is just a structuring step. So I'm not sure if I can explain it better.
And ultimately, shareholders will not be impacted because as long as they approve the Australian asset disposal and the scheme, they will receive the full scheme consideration of 53.8 cents that fully values the Australian assets, regardless of the price that it is sold.
It's impacted already.
Yeah, it's considered taken into account, exactly.
I think maybe one way to just think about this is if you think about the totality of the portfolio, based on the latest appraised valuations of both the Singapore and Australian assets, it's about 55 cents, right? And basically, what shareholders at the end of the day are getting in terms of the scheme consideration is at that same amount. It's at NAV, right? So the Australian asset disposal is a means to an end, right? I would basically, say that the focus at the end of the day is ultimately you as a shareholder, what are you getting, right? And effectively, you're getting the NAV of the value. And the NAV of the value reflects the latest fully independent value, value of both the Singapore and the Australian asset. So that's just the way to think about this. You are getting back your scheme consideration in the form of the NAV of the latest portfolio valuations.
Yes. What is this Australian asset disposal? If privatizing the REIT anyway, why not dispose of the asset afterwards? It's part of the, as you explained, it is
Okay, maybe I share a little bit more with this. I can start first, then you can add on.
Sure.
The Australian asset disposal, if it's being privatized, the key point is this: the Australian assets needs to go through a regulatory approval in Australia, because we are foreign buyer, or the privatizing party is a foreign buyer. So they need to go through a perp approval. If we don't do the disposal and we proceed with the scheme, the Australian asset disposal can take 3 months, 6 months, we don't know how long.
Minimum 6 months
for
actually.
the
At least,
Australian
yeah.
authority to approve it. And that will add a lot of uncertainty to the completion for this privatization. Once we dispose it in the resolution, that will add a lot more certainty to the unit holders. And that is something which I think the offeror wants to give.
Yeah?
Yep. The timeline, as publicly stated, is at least 6 months to consider any application. And so, we don't want the timeline to drag. We want to be more certain in terms of when we can pay out the scheme consideration to unit holders, and hence we are taking this structuring step so that there is certainty on when we can finally close the transaction.
Yes. Who is the independent valuer in Australia? Are you able to disclose?
Yeah, we can disclose this.
Disclose in the
I have to go through my notes, man.
Colliers, is it?
The valuation done for 14 Mott Street is Knight Frank valuation.
Knight Frank valuation. Okay. The international.
And for the Ingham's Burton in Adelaide, it was also undertaken by Knight Frank. For our third asset in 25 Grenfell, that was valued by Savills.
Savills.
Yeah.
Yeah.
So they are all international consultancy company, property consultancy company.
Right. Okay. So the last question, how confident are you that the unit holders will accept?
Your vote counts.
Yes.
Your vote is very important. We will not take it for granted. We hope that unit holders will give us the support for the scheme.
Okay. Have we anything to say before we call it off?
I think Roy has I share his sentiment. So the vote counts. We urge all shareholders to come out and vote if you are in favor of the transaction. And ultimately, we put forward a fair, credible offer, which is at NAV of the revised portfolio value.
So you have tonight heard the offerer and the manager. You posed many questions, which are very interesting questions, relevant, been answered. Now you have to make an informed decision, all right? And what is good for you? You've heard that the offer is almost what, 90 plus
96 to 99.
96 to 99% close to NAV. Independent financial advisor has recommended. The board has recommended. Independent directors have recommended. It's a scheme, all right? So the court will also have a look. And you need to make an informed decision, all right? So we hope that you have gained from tonight's event. If you have any more questions, I'm sure you can write in and it will be answered. So good night and think carefully and vote. Thank you.
Thank you.
Thank you.
Thank you.
Thank you.